Yeah.
Ready or not.
Give me a high sign.
One. Barbara,
Good morning. Are we ready to begin?
we are.
I'm Barbara Goldberg Goldman, and I'm founder and co-chair of the Affordable Housing Conference of Montgomery County. I know that many of you did join our 29th annual Affordable Housing Conference Summit on October 2nd. That was our first virtual experience as an organization, but we did have technical difficulties. Man-made miracles do not help in times of the pandemic, I'm afraid. But it interfered with launching one of the most important panels that we had put together. Economic and housing uncertainties, the impacts upon renters, homeowners, and multifamily property owners. But we are delighted that you're back with us today. With this pandemic placing enormous financial strains on housing burdened tenants and homeowners, as well as the multifamily property owners and lenders, today we're going to examine the challenges and the private and public sector solutions to guide the community through the difficult time. And difficult it is. But before I introduce our distinguished panel, I want to point out that you can please submit your questions using the Q&A button. We'll save time toward the end of the hour to answer as many as we can get to, and those that we cannot get to, if you'll leave your email addresses, we'll go ahead and send you the responses. So it gives me great pleasure to welcome to you our moderator, Brian McLaughlin. Brian is president and CEO of Enterprise Community Development, Inc. He has 22 years of diverse experience managing real estate business, the lines across the nonprofit, the public, and for private sectors. He served as Assistant Secretary of Maryland's Department of Housing and Community Development. He has held various senior positions at Fannie Mae. He was the founding CEO of Lantian Development, a Maryland-based private equity real estate investment and development company. And we are so very proud and privileged that Brian is here with us today. Cindy Sandquist, an Affordable Housing Conference of Montgomery County board member, is president and CEO of Edgewood Management and Vantage Management, Inc. She directs the strategic vision for both Edgewood and Vantage, leading 2 experienced teams and overseeing a diverse portfolio of affordable and market rate multifamily properties. Edgewood, which is a premier affordable property management company with a reputation for innovative practices, has established a presence here in Montgomery County, the district, Virginia, and in 12 other states. Stacy Spann is the executive director of the Housing Opportunities Commission of Montgomery County. HOC provides and develops affordable housing and supportive services that enhance the lives of families of low and moderate income and individuals. Stacy previously led housing organizations in Howard County and in Baltimore. He's an adjunct professor in the University of Maryland's Master's Real Estate Program, and he teaches its capstone course. Frank DeMarais is DHCA, the Department of Housing and Community Affairs of Montgomery County's Deputy Director, and he has managed and developed a broad range of local and national programs in the housing industry since 1979, all relating to mortgage loan products and affordable housing development. Prior to joining Montgomery County's DHCA, Frank served as the Home Purchase Assistant Program Manager at the Washington, D.C. Department of Housing and Community Development. He also held management positions at Fannie Mae and Freddie Mac. And my dear friend Barry Zegas is a senior fellow and former director of housing policy at the Consumer Federation of America. He consults with housing and community development nonprofits and foundations through his firm, Zegas and Associates. Barry served as Senior Vice President for Community Lending at Fannie Mae for over 10 years and also was President of the National Low Income Housing Coalition. He is a trustee on numerous corporate and nonprofit boards. I want to give a real loud shout out to Diana Eisenstadt, our Executive Director, and on behalf of everyone on the board, including my esteemed Honorable Co-Chair, Ralph Bennett, a welcome, and let's get on with the show. So Brian, over to you.
Great. Thank you, Barbara. And thanks to the panel. Thanks for everybody. Look, I have a really simple role, which is to keep this moving. So I'm moderator, and there's not going to be a lot for me to do here except ensure we are able to get to all the topics that I think are the most important ones that rise up to the top. So what you've got in front of you is a real practitioner core. I mean, I think I want to draw a distinction between, we've all been at this, this is 7-8 months of the virtual world. We're going to probably have a moment where someone freezes. We're going to probably have a dog bark in the back. We're going to have the normal stuff. But what's not going to be normal today is the depth and breadth of the conversation we're about to have, because you have in front of you some of the region's leading thought providers and practitioners in this field. So we hope we can get to the real level of this, some of the core issues, and not just scratch the surface. So that's on us, that's on me, that's on you. So that means send the questions in. We're not going to get to them all, but we want you to send them in. We're going to read them, and what we don't get to today, we're going to follow up on. So this is a real conversation for a real discussion here. So what I want to do is just frame this a little bit more, and then we're going to jump in. Uncertainty, right? Housing and economic uncertainty. I mean, so we're living in uncertain times, and I think what's unique about this moment is the distance between uncertainty. So it's not any longer a question of generic toilet paper or brand name. It was a question of, do we get to have toilet paper? For many folks, this has gone from the question, not the uncertainty of, do I pay my grocery bill or do I pay my rent? For a long while, it was, do I even get to do anything this week? I mean, before unemployment benefits and other things kicked in, there were some very scary times. So unfortunately, this period, and for a lot of folks of color, this has been a really deep moment of emotional reckoning and acceptance about, look, I mean, we've lived in an uncertain environment when we've been unfairly pulled over. I've been unfairly pulled over 4 times, when we're unfairly pulled over, when we run into an issue, when we walk into whatever environment. So the fact that we're all just being a little more open about uncertainty, I think is a great moment. And what this conversation is about is to say, what does it mean for housing? What does it mean for residents? What does it mean for our communities? And so we're gonna roll this up. We're gonna have a good conversation today, and I'm honored to have this team here to have this conversation with you. So Cindy, you've heard the resume, you've heard the background. I think she's a great opener to really put this in perspective for us. So with that, Cindy, please, the floor is yours. Still got you on mute, Cindy, and told you guys
Sorry.
we'll have at least 4 or 5 of these today. Yep.
That's okay. Good morning, everyone. Thanks, Barbara, Diana. Thank you, Brian. I'm looking at our panel, and I have the opportunity to be both Stacy with HOC and Brian with Enterprise still today are 2 of my clients, which is an interesting dynamic here. We've worked together, and they've trusted us with the management of their communities for a long period of time. I think that, one of my perspective from being a management company that manages somewhere over 20,000 units, and a large portion of them being affordable. I think the best way of describing what's happened in this period, unprecedented period of uncertainty, is we've had to pivot from day number 1 regarding our staff, because they are the first line in terms of responding to the safety of our residents and our employees and our obligation to our owners. So it's been, an interesting process just because no one was prepared for exactly how we were going to pivot and all the policies that we had to put in place. And then, making sure that our residents, one of the things that I think has happened with COVID-19, and I try to stay positive for my company, for my family, is that I think that people have become more compassionate and caring about one another. And I have seen this in our communities. We have a community services arm that we use. We have a nonprofit that we use. We've had to pivot there also in terms of how we are going to serve our residents because community services, community rooms were closed. There are so many things that our residents were used to. And we had to change the way we were working with our residents and go on to what they needed. They needed food. They needed to understand how to help their children with education. They had to understand Chromebooks. We've kind of pivoted to being teachers in some ways and really trying to think about the needs of our residents. We have given them, we have a lot of different jurisdictions that we're in, every available housing program, everything that's been available to them, it is our job to make sure that they understand it, that we help them get to those places where they can get the help that they need. So it's been, I think that this only adds to the housing crisis that we already know we have. This is a shortage. 7 million people that, don't have the housing that they need. So this crisis adds to what was already an existing crisis for us in this affordable housing arena. I had the privilege of working for Mr. Ford, old Mr. Ford, I call him because there's another Mr. Ford. And he, our mission is to improve people's lives. He really believed that everybody, regardless of their economic status, race, should deserve a safe place and an affordable place to live. So that carries us forward every day in trying to carry out that mission and make sure that we do everything we can do to ascertain that that's the direction we're moving in. This has made it a little more difficult. We have some barriers, but we're getting through those barriers. It's interesting because all of the associations and the institutes that we deal with, AOBA, NAMA, affordable housing, these industries have come together and shared information about what they've learned, which has been pretty awesome. I've never seen that community happen as I have recently. And it's been very helpful. We're all out there trying to share our best practices, figuring out what's the best way to handle things. So I'm very proud to be a part of it. And again, I always look at my clients as partners, but I feel like we've all been partners in this and trying to figure out how to deal with the expenses, dealing with and again, the safety of, your owners of properties. How do we deal with all these new expenses? How do we deal with the safety of everyone and keeping things running? So I'm welcome lots of questions, and I think what you're going to find today is different perspectives because again, I have clients that are here and they trust us with managing their assets, but my perspective is day to day. We've had to pivot and move people around in order to make sure that we have things covered. Maintenance issues. We've had to only be able to deal with emergencies. which is kind of scary because, there are other maintenance issues, but we've had to make sure that people felt safe and that we dealt with the issues that we could given COVID. So that's my side of it this morning. And I'm happy to pass it over to Brian again. And again, thank you for having me. I appreciate it.
Great, Cindy. Some terrific themes. We took notes. We're going to come back to some of that during our Q&A. Next up is Stacy.
Sure. Well, first off, good morning, and I hope all is well, or as well as it can be, and that folks are wearing masks and staying vigilant. I think Cindy started us off perfectly, and underlying everything that she said is there are a few very simple themes. And I mean, the fact of the matter is, when we're serving folks in this county, the effort is how we get them housed and how we keep them housed. So our business hasn't changed in terms of those two things. What has changed is the level of urgency at keeping folks housed, the level of urgency at addressing systemic inequities. And I can't tell you that we've come up with any great ways to eliminate those inequities or level set the families and individuals who are enduring them, who've been enduring them for many, many years. What I can say is that because of technology, because of support from our county government, because of some of the vision of our commissioners, our board, and the diligence of our team, as well as work with partners, we've been able to survive. And that's, while that is, it's awesome in a pandemic to talk about survival, it is also disheartening, right? Because what's continuing to happen is those inequities persist and they're deepening. And so I know that's a little off topic. At least it seems like it's not there's no direct line, but there is, because these families are in need every single day, and that need is growing. And what we're hearing about is how well the Dow Jones is doing, right? We're hearing about how interest rates are low, and so families who can afford to are buying homes at breakneck speed, and it's a seller's market, right? What we're hearing about is how schools are working as hard as they can to get students back into the classroom, right? We're not hearing about those families and individuals that we're supporting every single day in community, trying to keep them connected to lifelines. And then those lifelines are super simple. They're the functions that government provide. They're the functions that HOC provide. It's housing and services designed to support families and help them thrive. And so I'd be remiss if I didn't actually bring us to the challenge around equity. And as we think about stimulus, as we think about how we support families, we cannot exacerbate the ongoing housing crisis by simply doing good enough. We actually have to figure out how we're going to stop this inequity and how we're going to level the playing field. And we have to be intentional, deliberate, and aggressive about it. Right? This is the time, and we've already started to see it, right? We've already started to see a shift in wealth. Right? If you're a billionaire, you made more money. Right? I'm not gonna knock the system, right? But what I will say is, it is in part our responsibility to make sure that these families that we're serving, who, by the way, could very easily be the next vanguard of artists, leaders, business professionals, leaders in government, right? Very easily, with just a little bit of support, be the next vanguard. We have to make sure that those folks have a toehold in this economy. We have to make sure that they recognize their place and belonging in this broader Montgomery County community. We have to recognize that we need to lift these families and individuals up, regardless of mistakes made, how they made them. No matter how we got here, we're here. And if we want this entire county to do well, we want this entire region to do well, we should look to the folks who are most resource challenged and figure out how we're supporting them. So.
Great. Stacy, thanks. Okay, let me, before we keep going to Frank, let's revisit some themes. So we're starting to see a story, right? It's very hard to be compassionate and caring right now in a world that seems like it's much more cutthroat and much more risky. Okay, so how do we as practitioners show up compassionate and caring? Stacy talked about sustained access to lifelines, right? The idea that now we've broken a lot of those lines. We've got breaks in our systems. How do we continue to think about rebuilding and strengthening those lifelines? Cindy hit on that as well. And then the uncertainty about when we as a society will take on inequity. Stacy hit on the notion that there's no longer uncertainty. In fact, there's an urgency that this moment has created because it's highlighted the inequities in ways that we can't deny. So what does that mean in this moment about our commitment, our resolve, our strategy, our approach about inequity? Okay, emerging themes. All right, Frank, floor is yours.
Okay, to pick up as we can best on that, fundamentals of what we're focused on, and we think the whole community is focused on, is the urgency of the moment. This is the playbook that we have in place for emergencies, for hurricanes, disasters, et cetera, which is, you have to focus on what you have in front of you, and then you work toward recovery. We are staying focused on recovery. So the county, across the county, created recovery task forces, 5 different areas, including housing. But one of the points that was very clear was that if we don't exit this emergency stronger and having fixed some of our systems, then we did not do our job. So just dealing with the current emergency is critical, but it is a challenge and a charge to each of the Montgomery County divisions, and particularly our recovery work groups, to identify structural and things that we can do coming out of this. We came into the emergency with already 25, 30,000 of our households in housing crisis already. The focus on households under 50,000 income, spending more than half their income on their housing. We counted it as close to 30,000 households. Those are people not receiving any housing assistance. What we see in this emergency is the suddenness and the concentrated impact is just devastating certain segments of the population. So we did surveys of rental delinquencies. We've conducted them at the county level. Our best estimate is about 15% of all the rental units in Montgomery County experiencing delinquency. We see concentrations in certain lower income communities, and particularly in affordable housing properties. Just the census pulse survey that's done on a regular basis every 2 weeks. The most recent one indicated as much as 18% across the state who are not current on their rent, concentrated with 30% in Latino and Latinx communities, 22% in households identifying as Black, and 8% in households identifying as white. Under 35,000 income, it's over 30%. So, the data is consistent. We think we have a challenge that far exceeds our current financial assistance levels, and everything we're doing in the county is to focus that assistance where the risks of eviction and homelessness are greatest. Unemployment crashed. Everybody knows, the basics, but we went from 16,000 unemployed persons in February to 48,000 in May. Most recent August data from Department of Labor, 38,000. So this is a collapse that's completely different than 2008, 2010. That unfolded over time. This came crashing down. So the public role, the county's role, is to direct federal, state, and local resources and deliver that assistance to mitigate the most urgent and potentially devastating impacts. And right now we see that as the eviction risk. Homeowners have a little bit more lead time. They are being damaged. Their forbearance options under a lot of the federal loans help to soften that. We recognize that. We're focusing what we have available in terms of human and financial resources on the eviction threat. The courts were closed from April through the end of July and reopened for failure to pay rent in August, end of August. The courts are still hearing pre-COVID cases, so the eviction activity is very, very low. It is going to build the governor's order. We have a protection in the state of Maryland that if you can demonstrate in court that you've had an impact on your income, substantial impact from COVID, the judge will provide a stay of eviction until the end of the emergency. At that moment, the day the emergency is lifted, all of those judgments will be enforced. No additional court action required. The CDC, which runs through the end of December, provides similar and broader and easier to exercise, but again, only on failure to pay rent, and that will expire on December 31st. On January 1, any judgments against persons on those stays will be enforceable immediately. So we have a period of time that we're working to support as best we can for the existing at-risk community. 15% of Montgomery County renters is 20,000. We believe at least 13,000, 15,000 of those are COVID impacted and could be more. Pre-pandemic, we were running about 5% delinquency versus what we consider right now to be about 15%. So everything we're doing is trying to connect tenants to the financial assistance. We have about 25 million of federal rental assistance committed. We expect all that to be dispersed by the end of this year, if not dispersed, but committed, and some of the checks going out in January, February. But that 25 million, we think, would be about a third of the at-risk tenants receiving some assistance. And for most of them, it brings them mostly current. It doesn't necessarily get them all current, provides a stepping stone and a structure. We have counseling and legal aid assistance. Everything's focused on connecting the tenants to information, working with their landlords. As Cindy was speaking and Stacey speaking, from a landlord perspective, everybody is looking at the same data, the same crisis. And we think the landlord community working with the tenants on transitions, on payment plans, on structures is going to be an extremely important component of getting us through this. Yeah, we know it's not going to be the first quarter. We don't know if it's going to be the second or third quarter before we start seeing real recovery, if we see it then. So our efforts will be to continue to make available all the federal resources. We actually have additional CDBG funding that's been awarded to the county. The state has made some of their CDBG funding available. So we'll be continuing beyond the 25 million we've committed for rental assistance. At the same time, the county is spending an enormous amount of its CARES money on food, health, and education expenses to get things through. So from a housing perspective, it is everybody working together. Our biggest challenge is connecting with the tenants. They're in trauma. They're not responding to a lot of the outreach. We're working through the landlord community as best we can with community organizations, every network we can muster to help a tenant understand how to work with a landlord, what assistance is available, what documents are needed. These are a lot of households that have never asked for assistance before. They don't know what federal assistance requires for income documents, et cetera. So the heavy lift on the public sector is making the funds available, connecting it with our residents, and looking 3, 6, 12 months ahead through this, but hopefully coming out the other side with a better infrastructure and a better understanding of what it takes to try and maintain that stability once we get there. So that's where we are in Montgomery County on the local government side.
Thanks, Frank. So Frank made it clear to us that while there's some things that are uncertain, some things are pretty certain, right? And he's now brought some statistics to bring to the picture. I think, Frank, there was a request on whether some of this information might be made publicly available. So we'll certainly follow up and see if any of this can be posted. But as Frank said, we went from 16,000 to 48,000 unemployed, a threefold increase. It's dropped back down to 38,000, but that's where we are. He pointed out before this, we had way too many people overpaying for rent, and now we have even more people overpaying. So what do we do about that? So we're beginning to talk about resources that deal with some of those in need. And I think, Frank, that's a great conversation. But you brought up an important word, which is trauma. So while we've got this curve of people who are working their way through it, and a lot of our resources are probably more shaped at the middle part of that curve, there's a tail, there's a traumatic tail that that is the scary story that we don't talk about a lot, but that's happening for many of our residents. So how are we thinking about dealing with the particular trauma that many folks are going through? So we'll come back to that, but that's an important thing. So the last perspectives are from Barry, and then we're going to open this up for the balance for a general Q&A. And you're welcome to continue to send in questions to the panelists. So thanks, Barry.
Thanks, Brian, and thanks to all the panelists who preceded me, who I think set my tail end piece up very well. I think one of the hallmarks of where we stand nationally, which is where I was asked to focus on the panel today, is that in some ways there's more uncertainty today than there was immediately following the emergence of the virus and the immediate crisis interventions. I say that because at the moment that the crisis hit, in the housing sector, government actually acted relatively quickly, and in my experience, almost uniquely quickly, to put in place circuit breakers, I would call them, to protect both owners and tenants. On the ownership side, the government agencies, FHA and VA and Rural Housing Services, and on the semi-private side, Fannie and Freddie, announced mortgage deferral programs and mortgage forbearance programs, which immediately enabled borrowers, to start deferring their payments if they were in trouble. Similarly, we saw Congress act with alacrity in the initial CARES Act, producing not just a standardized set of forbearance requirements for government-regulated mortgages, government-engaged mortgages, so basically FHA et al. And Fannie and Freddie, but also enormous resources through the supplemental unemployment payments and through specific targeted housing payments that actually did a tremendous amount to help blunt the impact of the rapidly rising unemployment that Frank described, and help undergird the housing market by giving people the income they needed to get through this crisis with less stress than might have otherwise have been the case. Now, fast forward to 6-7 months later, what have we got? We have a Congress that cannot decide on how to develop or how to come to the finish line on further stimulus and economic support payments, which means that people who are relying on the $600 a month supplemental unemployment to pay all their bills, and in many cases subsidize their mortgages and their rental payments, have no such prospect in sight. We have owners who are going to come shortly in the next few months to the end of their full year of mortgage forbearance with some clarity about what happens next, but not complete clarity. And of course, the forbearance has not relieved any of these mortgagors of the obligation to pay the mortgage. It has just enabled them to forbear on paying them. And on the rental side, we've had a patchwork of eviction moratoria through a succession of the CARES Act, local actions, and now the CDC. But what none of them have actually done is relieve those tenants of the burden of paying their arrearages, which are building up at a furious pace, nor has it given the property owners who are not permitted to evict, which I think is the right thing, for non-payment of rent, any means by which to collect the rent or supplement it or substitute in any other way. So if you're a property owner, a tenant, or a mortgagor who is in forbearance right now, in a sense, your sense of uncertainty is higher today than it might have been immediately following the emergence of the virus. The data that Frank shared at the county level is mirrored at the national level, as are the racial and wealth disparities that Stacy mentioned as well. But if you look at just renters nationally, I'm looking at an MBA survey that is published every quarter, and this is published in September, so it's through that end of the third quarter. They found that 10.5% of all renters missed one payment over the prior quarter, 4.5% missed two payments, and 2.7% missed all three. And taken together, the percentage of renters reporting missed payments by week was constant at around 11%. By race and ethnicity, there's no surprise, these rates were higher for people of color, 14.2% for African Americans, 10% for whites, 9% for white non-Latinx, and 14% for Latinx. So what you have is a very disparate picture here of people in the rental market. On the ownership side, the MBA found that 5% of mortgagors missed one payment over the quarter, almost 3% two, and 3% all three. That meant that taken all together, pretty constant in the quarter, the delinquency rate was about 8% for borrowers missing payments. And throughout the quarter, 20% of mortgagors received permission from their lender to delay or reduce their monthly payment. One of the interesting uncertainties for investors and lenders in this environment has been the disparity between the people seeking forbearance and those actually taking advantage of it. So the MBA found that about 30% or a third of those who sought forbearance actually took advantage of it. So this means that there are people who have sought forbearance as insurance, if you will, but are struggling and doing everything they can to make the payment, which, given they'll be liable for the payments at the end of the forbearances, makes good sense. And again, by race and ethnicity, we see big disparities. Those percentage of mortgagors reported missing payments was 14.7% for African Americans, 7.5% for whites, and 6.3% for white non-Latinx, and 12.5% for Latinx borrowers. So what are the prospects going forward? We've all watched in real time as Congress has failed to come to agreement with the administration, or in fact, both houses of Congress come to agreement on whether and how to extend unemployment benefits, whether and how to supplement the CARES Act funding for CDBG, emergency rental assistance, Section 8. And we see at the moment, the administration's entire policy on this seems to be the CDC moratorium in the rental sphere, where we're seeing mixed results. There have been a number of widespread news reports that the CDC moratorium on evictions is full of holes, has been challenged at the local and at the national level by landlord and property owners who feel they're being unjustly set aside to bear the economic burdens of dealing with this crisis. And we're seeing an ongoing question of whether tenants are actually able to take advantage of the CDC moratorium because of peculiar conditions that were placed upon getting assistance. The tenants have to sign an affidavit at risk of perjury. They have to affirm that they have sought and not received any other form of governmental assistance, that they're under duress because of COVID-related financial stress, and so on. And A, understanding what you have to do, B, getting the form right, C, overcoming the fear of potential future prosecution for being caught out on maybe not having done everything exactly right, we think is also keeping some residents from taking advantage of that. Nevertheless, even if you do take advantage of it, as everyone on the call and in the audience knows, that moratorium does not relieve the tenants of the burden of paying their back rent, and it enables landlords to impose fees and penalties for failing to do so, which was not a feature of the CARES Act protections earlier on, which applied to a smaller subset of properties. So we're likely to see an enormous potential crisis in the beginning of the next year as this moratorium rolls out and residents and tenants are confronted with the bills, which will be not just pay your next month's rent, but pay the rent for the last however many months you haven't paid it. So the uncertainty factor, I think, is getting larger, not smaller, as the crisis evolves, and the federal response is much less certain going forward. It's possible that Congress can enact something in a lame duck. Some of that will likely depend on who wins the top slot in the election next week. A lame duck could come together with a large package that would begin to address some of these underlying questions. But given the history of the last 3 months and the inability to do so in the face of this looming crisis, I think we have reason to be cautious and not fully confident. Going forward, again, depending on whether the administration changes or not, leadership, we're going to see a scramble in January to try to start addressing some of these underlying tails coming out of the crisis. And of course, we still don't know what Fannie, Freddie, FHA, and others are going to do about mortgage forbearance after the first year's worth of forbearance is no longer available. So let me stop. I'm afraid I've added only more uncertainty and turmoil and probably raised everyone's blood pressure a little bit if you haven't been following this. And I want to thank the panelists who are what I call the pointy end of the stick, dealing directly with residents, with property, and remind everybody that Providing money to tenants to pay their rents is not just about helping them. It's also about enabling their property owners to pay their obligations and debts. And it's about local government being able to collect property taxes and have the revenue to provide the services that are so desperately needed. So this is an ecosystem that is highly interdependent, and the uncertainty affects every part of that system.
Thanks, Barry. Look, I think in a normal world, we would stop and everyone would applaud, and then we'd start Q&A. So virtual and thank you. Okay, let's jump in because we've got about 20 minutes left, and I think there's a lot on the table. Let me preface it all with this. None of the questions that will come forward from here on reflect my opinion necessarily or that of Enterprise or anything else. My goal is just to be a little thorny. So let's stick with the topic of eviction. So in the world we live in, if you don't pay your car payment, you get it repoed. You don't pay your credit card, you get it canceled. We don't make the cancellation of housing contracts quite as easy because of the social impact. So we have the eviction process. The eviction process is the sole process to remove people who aren't paying, who are not honoring their contract. Landlords get a bad eye because they want to get people out on the street that aren't paying, but their defense is, as you said, Barry, we got to pay our maintenance, we got to pay our property maintenance. We need money too, and people that aren't paying us are preventing us from running our small business. Residents say, look, it's not my fault. I don't have a job. What do you want me to do? But then residents get the black eye or the bad eye because there's the thought that, well, many of you actually can pay. You're just choosing not to because there's no teeth in the system and there's nothing anybody can do to you right now. And there's this now noise about, well, government assistance is going to come, it's going to bail us all out, so we don't have to worry about it. But then you get folks who say, well, wait a minute, I'm breaking my neck, I'm paying my rent every day, I'm not running up a balance. But if I know government assistance is coming, why don't I stop paying like my neighbors and we're all going to be saved? So again, not my view, just trying to frame it. When you hear that, and this is the dialogue and this is the conversation, as practitioners, what do you say? How do you help bring some light into this conversation? It's open for the full panel.
Yeah, Brian, I would just say at the start, when the initial mortgage forbearance announcements came out for about Fannie, Freddie, and the government agencies, a colleague of mine who I respect a lot, who has a long experience at the GSEs and in government service and in the private sector, wrote me a note railing about the basically raise your hand, get a forbearance approach that the GSEs had taken, which was informed in large part by the very difficult experience of the HAMP programs in the 2008-2010 period, when consumers found it so very difficult to get mortgage relief because of all the hoops they were being asked to jump through, because of the concerns that people would take advantage who didn't need it. And so my colleague said, people who don't need any kind of relief are just going to call their lender and ask for a holiday. The fact is, we haven't seen that happen. And what we've seen is people requesting forbearance, but still making the payments. What we're seeing is tenants trying to make the payments. And I'm sure Cindy can attest to this. I'm sure Stacy can as well. I think we have to get off of the sticking point of the moral hazard of being generous in a pandemic and accept the fact that we're much more necessary to overemphasize the importance of care and support for our fellow Americans than we do about the few rotten apples who are going to take advantage. Because it turns out there aren't that many rotten apples and they're easily found and rectified. I do think we're going to confront a big problem when this eviction moratorium ends, and we do have these competing interests clashing with each other. And I know the property owners, like Cindy and others, they don't want to throw their tenants out, but at some point you're facing the economic reality that you need to find some way to generate revenue in your property, whether that's by extending new kinds of allowances to the tenants or not is a different question. And I'm much less concerned about the larger property owners and those who are involved with federal and state programs where they can get some relief for their obligations than I am for the smaller landlords whose relationship to public subsidies and public entities is fragile or non-existent. And they're the ones, I think, who are most likely to get left holding the bag and facing their own economic crisis as they can't collect rents, whether or not they can evict tenants, and this pandemic goes on.
Good perspective.
So I think we have to focus more on the needs that we know these tenants and owners have and be a little less hung up on a couple of rotten apples getting through.
Fair point. Any other perspectives?
I actually I don't disagree. I will say that the notion that every large owner having sort of an easier time accessing governmental support, probably not as simple as that. I mean, we're a large owner, but well over 85% of our opportunities, our housing opportunities, are supporting families of low and moderate incomes. And I will say that what we're seeing, even in the inequity that I talked about earlier, bolsters the case for mixed income development and ownership, because but for some of those mixed income properties, we would have challenges from which we probably couldn't come back easily. And the fact of the matter is, a prolonged crisis, and I unfortunately think it's going to be prolonged, the likelihood for us to support families for the long term is compromised, right? Because we do support the vast majority of families we support are low and moderate income. But I don't disagree on with the overarching argument at all. I think that when we're talking about stimulus as a country, as a nation, that legislators have to be focused on the actual taxpayers, the wage earner, and generally the wage earner, right? Because capitalism, the wage earner takes care of all of the actual folks in the business sector. And I think it's an extraordinary failure and set of tone deafness that has folks lobbying for the airline industry, in lieu of the common taxpayer or wage earner. I mean, I think that is a level of just tone deafness that I'm shocked about, right? Because ultimately, if we can keep, part of the reason we see liquidity challenges and we see the economy shutting down is when people stop consuming. Fact, right? And so, but you start your consumption with where you live and what you're going to eat. And so I think it's really important for policy from our legislative branch to be focused on how are we continuing to house people, and then make as close to whole those landlords who continue to support the families. And by the way, they should be supported. So I'm not advocating otherwise. But how are we really taking that on, and then therefore eliminating at least some of the inequity, right? And you're right, Barry. I mean, I think that this focus on, oh, well, these people don't work anyway, or the trope that we're hearing that is so damaging and completely inaccurate, that folks would rather earn get that $600, that extra $600 than go to work. Please, that's nonsense, right? Yes, are there a couple folks? Sure, but they're no different than some of the folks who are running the federal government.
Yeah, fair enough.
Yeah.
Good points, Frank.
Yeah, I just one of the real opportunities, as again, the learning process out of this, and we've employed it at the county level, which is to focus our financial assistance where the eviction and homelessness risks are the greatest. So there's a lot of metrics. So our Department of Health and Human Services, which is running our $20 million CARES Act rental assistance, spent a fair amount of time before and then in the early parts of the emergency, documenting and identifying the areas and the demographics and the characteristics of the households most at risk of losing their housing. And so our money and our outreach has been absolutely focused. Literally, it's down to 33 census tracts, about 20% of our rental population, that we did a designated outreach and prioritization. And we're hoping that by concentrating the rental assistance, financial assistance, as Stacy's just speaking to, where it does the most good, has the most multiplier effect. These metrics are out there. Urban Institute published this summer a very similar metric set on the characteristics that we can help everyone, but that doesn't reduce necessarily the homelessness And the other big part that we haven't talked about is that, this is going to be a homelessness crisis. Okay, eviction
That's right.
is an event, as they homeless services folks focus, evictions are caused by poverty. Evictions cause poverty. So we need to, and dramatic poverty. So anyway, there are tools, and we think there's a good way to come out of this thing with a much more focused, execution of all of our rental assistance.
Good. We've got a few more questions. Cindy, I didn't know if there was something you looked like you wanted to get in, or you find to move on.
Go ahead, move on.
Okay. Another quick topic that came up was inequity. Okay. So again, I'm just poking here. So before COVID, African Americans had the highest rate of childhood asthma, highest rates of death by asthma, highest rates of diabetes, cardiovascular disease, hypertension, shortest life expectancies. We can cite the stats. They were what they were before COVID. COVID hit and added a whole nother layer. And I think we've seen the differential rates of death and impact because of some of these underlying conditions. So in this moment of truth, this moment where the lights are on a little brighter, and it's, again, as we said before, it's a little harder to deny some of this. What are we going to do? Is this going to be an inflection point? Are we really going to do something different? Do we know what to do? Do we really know what's underneath all of this? I've got notions. I know you guys do, but I want to turn it over to you to ask you to share some perspectives. So
Do we know different? Like, do we know how to solve it? Sure, we know how to solve it, right? But it's about resource distribution, right? I mean, it really is. I mean, look, it's about pulling apart our planning and zoning policies and our housing policies, right? It's about pulling apart our educational policies, and then actually treating folks with the dignity that they deserve as citizens of these United States, regardless of where they stand at this moment on income. And that means that we actually have to have a national strategy, and that becomes a state and local strategy around deconcentrating poverty, right? And hand in hand with that, there has to be health initiatives and educational initiatives. We're seeing these families suffer real time right now, real time, and on every possible metric. So we know what to do, but it again is about the most responsible resource allocation. And incidentally, that begets the tide that lifts, many boats. And we're not just seeing pockets of prosperity. We know what to do. Are we going to do it? That's a whole different thing. And so I think that's, we need policymakers to come together with practitioners and really focus on it. I mean, I think the housers in this region are doing fairly well. Is there other stuff we could be intentional about? Absolutely. Should we be partnering with schools? 100%. Should we be partnering with job centers? 100%. Should we be partnering with hospitals and urgent care providers? Absolutely. So I think we actually have to be willing to work together and then start someplace.
fair enough. Point.
I couldn't agree more with Stacy. I mean, I think financial burden does not discriminate. And there, honestly, so I attack it from our communities and work with our owners so that we could have that reach out and resident engagement, and making sure that the residents that are in our communities know we care, that they are giving them all the opportunities that they sometimes aren't aware of. Even, there's a lot of hope versus fear today. The fear of, listen, you can come down and recertify and talk to us about the situation that's going on in your household. Talk to us, let us help you, let us partner you with who we know and what we know that we can do to help you. So we're doing what we can do day to day to make sure that our residents in our communities have the help that they need. I know it isn't, we wish we could make it widespread, and we do some things that, we can do with some of our foundations, and we attack areas like Baltimore that we have a nucleus of properties in, or in DC, giving to the Capital Food Bank and hoping that, we're targeting a bigger group of people, but partnering with our clients and with all of what what we have access to is probably the most important thing we can do today.
Good. No, well said, Cindy. And I think it's hard to answer that question in a few minutes. I think you and Stacy framed it well. We've got more to do on this topic. So while our time is almost up, I don't want this topic to end today. The last point, and we've just got 2 minutes left, I just want to come back to Frank's point about trauma. So a statement and then a quick perspective from anyone else. The absence of mental health services to low-income residents of our community is one of the greatest shortcomings of our society. I'll say it that way. We have people in some of our properties who are on the wait list for over a year and a half to get access to subsidized support for mental health. This uncertainty, if nothing else, breeds more trauma. Is there an answer? Do we, of all the resources we've talked about, is there a dialogue or conversation about more being channeled towards mental health support for low-income residents?
So very quickly, I mean, I'm a houser. I've spent my whole career working on housing. So like a hammer, I suppose I look for problems that look like nails. But I think in this moment, it's important to recognize that the loss of a home, an eviction can be the cause of mental health deterioration. And we know for a fact that, as a homeless person told me 30 years ago during a mobilization effort in Washington, I didn't become homeless because I'm crazy. I became crazy because I'm homeless. And I think we have to start with, what we can get our arms around right now. I think the larger questions you raised, Brian, are critical. And making sure mental health services are more widely and affordably available is critical. But we are just heading into, as Frank said, a mental health crisis driven by eviction if we don't get our arms around preventing these mass evictions, preventing mass homelessness. So I would argue in the moment, supporting the housing system and keeping people from losing their homes is maybe the most important support we can provide to keep people's mental health from deteriorating in a very stressful time when all of us are feeling the burdens of anxiety.
Yeah. There's no doubt that a loss of a home or the threat of a loss of your apartment becomes just another layer that may be the tipping point. So agreed, Barry. Stability of housing is an important part of keeping health a little bit more manageable. So I think with that, Diana, Barbara, I think I will have the panel, I including myself, shut up for now and give it back to you guys. So
Would you didn't have to shut up. We would go on for another hour at least. We talk about trauma hitting us from every which way. Barry mentioned that this is the ecosystem that we now are in, where everything is interrelated. And I really think that the key word today was trauma, that it is hitting all of us. The pandemic is hitting an existing crisis in the most traumatic ways possible. So we're all affected, and the inequities are even more glaring. And I think Stacy really summed that up quite well. So look, the Affordable Housing Conference is delighted that we could host you. We want to do it again. I think there's a reason for continuing this panel. We will try to do another one in the not too distant future if you're all ready, willing, and able to do so. This session will be, as are the others, taped, so we can run them on Facebook. We want to thank you again profusely for taking time out of your Zoom schedules, because I know that you probably are doing multiple Zooms a day. And thank everyone. And listen, we're supposed to have a 2021 event in person next May. I don't know that that's going to happen. We're hearing that it may be another year before we're able to touch and see one another right up front and close. But,
Halavai, as my grandmother would say.
You bet. So look, be well, stay safe, keep wearing I keep mine around my neck, your masks, and social distance. believe in science. And we hope to reconvene this group again, and I hope that you're willing to do it. So thank you, everybody who participated. Again, if there are any outstanding questions, we'll try to get responses back to you. And Barry and Frank, Stacy, Cindy, and Brian, really, thank you so much. You're part of our family now, and there's no escaping it.
Thank you so much.
Thank you to all the listeners who tuned in.
Thank you.
Be safe. Thank you.
Bye, everybody.
Thanks, everyone.